You'll have everyone on mute, Nadine.
I'm just going to mute the ones that are giving feedback.
Yeah, so nice.
Still a few more coming in.
Okay. We'll give it 30 more seconds. Morning, Brad Lord.
How are you, Keith?
I'm good, mate. How are you?
Yeah, I'm well. I'm well.
Good. Good to hear.
Hi, Braden.
G'day, g'day. How are we?
Okay, Nadine, we might maybe just start. We get all these people off to their day. Guys, welcome to the BDC Retail Huddle. Great to see so many faces on the screen. Thank you all for joining us. Today's session, this morning's session, we're going to cover a couple of points. We're going to look at the this retail rebound that we've seen happen. We're going to talk about what the economic outlook looks like going forward for all the stakeholders involved, and we're also going to touch on CBDs and particularly Melbourne CBD, considering it's been hardest hit during the lockdowns. So we're very lucky to have two special guests on the call this morning. Most of you are familiar with both, but as by way of introduction, we have Tony Dimasi, head of GapMaps Advisory, and then we have with a very special guest, we have Lord Mayor Sally Capp. So very lucky to have both of them on the call. Thank you so much to both of you for your time. Sally, you in particular, because I'm sure you're going to have a very busy 24 hours ahead in the CBD. So thank you to both. Tony, I might maybe start with you, and we'll have a look at some of this data and try and get an understanding of what's fact and what's fiction, and what the data is actually telling us.
Thank you very much, Keith. Good morning, everyone. Can everyone hear me?
Yeah,
good?
Sounds good.
Fantastic. Thank you, and welcome, everyone. Look, I've been a retail and property economist now for 4 decades, just about to complete my 4th decade. So when I had a look at at the results over the last, when I've had a look at the results over the last 6 months or so, I suppose that what is the really surprising thing is that we all know and we've all felt firsthand just the difficulties that we've had to deal with as a result of COVID. But if you were to look at the retail picture in Australia without the benefit of that knowledge, you'd actually be very surprised. And you'd probably conclude that there's a retail boom on, albeit that maybe 1 or 2 sectors might be missing out on it. But
video. Okay.
Is there a bit of echo?
It's a webinar.
Okay, I'll keep going.
I think we just need to ask everyone to go on mute if they're not talking, and that route is really helpful.
Okay, thank you.
Tony.
So the first point is that at a macroeconomic level, we all know, of course, that the federal budget and indeed the state budgets were always going to take a massive hit, and they did. But the federal budget, the hit to the federal budget, first of all, was far less than was expected, as you'll see from the data on this first chart. And secondly, the rebound that is now being projected as of the budget released only a few weeks ago is going to be the fastest on record. And really, we're expecting that trend GDP growth will basically return within a year, and that we'll be back to trend unemployment levels within 2 years, as opposed to typically, 6, 8, 10 years that has taken us post serious recessions that we've had in the past. So that's been great news, obviously from a macroeconomic level. And as you can see, if we look at, for example, what has happened and what is now projected to happen to GDP, yes, we had a fall of 2 and a bit percent in 2019, but sorry, in 2020 from 2019.
That's probably my
Sorry, Tony. Guys, could I just ask everybody if they could put their microphone on mute, please, just while Tony's talking, just to.
But that fall has been more than recovered immediately in 2021, with growth of twice, the typical annual level. So we're kind of already back on a GDP growth trend, and going forward, we're expecting growth to be at or slightly above the trend of around about 2.5%. If we look at CPI, and we've been in a low inflationary environment now in Australia, particularly in the retail sector, for many, many years, and it's actually been one of the difficulties that many retailers have faced, particularly in apparel, where there's been quite a lot of deflation that's made it hard for them to move their top line. And the outlook there is for inflation to increase slightly to round about 2 to 2.5%, which is, of course, the RBA's preferred rate. So that's all good. And if we look at the unemployment rate projections from the budget, again, you can see that we're heading back towards that sort of 4 to 4.5% unemployment rate fairly quickly. So really, these are a very, very sound. This is a very, very sound macroeconomic outlook that we're looking at, despite the obvious difficulties that we've had to deal with. So I'll go on to the slide. Thanks, Nadine.
Get that next slide up, Nadine.
Yeah, it should be coming to, I think, with all the attendees.
And as I said, if you didn't know that we've been through a COVID crisis, in Australia, but cafes and restaurants are missing out. Past 2 decades, the cafe and restaurant sector has been the standout growth sector. So in many ways, it's almost perverse to say that that whatever it is that has happened over the last sort of 18 months has actually resulted in an overall retail boom. These figures are much, much stronger than the pre-COVID for food retailing, clothing and footwear, household goods, or even department stores, where discount department stores as well as department stores. So whilst Myer and David Jones aren't going terribly well, significantly from their pre-COVID performances, and they're doing much, much better. And Kmart was always travelling well. So just to give you some quick numbers, in for the year to date in 2021, which is 10 months, so data that we have up to the end of March, the food category is up. Apparel is up 8%, and that's a category that had really struggled for many, many years. It's footwear and apparel. %, mainly, as I said, discount department stores. Cafes and restaurants are down 5.2%, and obviously that's been a sector that has really been hard hit because of the absence of personal movement. Is up 8.3%. So yeah, if you had a look at these numbers, you'd say there's a retail boom on.
Can you hear Tony, Nadine? Can you jump on to the next slide, please?
Excellent, thank you. And on a state-by-state basis, basically the same picture. Even the much maligned Victoria, and we obviously have, for whatever reasons, done it a little bit harder than others. But even in growth in retail turnover, albeit at not the same rates as in New South Wales and Queensland, but also WA, which again had really been struggling pre-COVID. Really well. Next slide, thank you.
I think we've got a Queensland delay happening. There you go.
There we go. There we go. Okay, so you mind, isn't it? And the answer to that is no, actually not. It's not. Yes, online, of course, is doing. It's basically pushed the online trend by probably about 2 years ahead. It's been measured in the US as well, at having pushed it probably about 18 months. In Australia, probably 2 years. But as you can see there, if you look at the two blue sectors, which are pure play offline, and then offline section of omni-channel retailers, bearing in mind these days the bulk of retail turnover is conducted by omni-channel retailers who are primarily bricks and mortar retailers. You can see that that in fact, and this is based on Quantium transactions data, that certainly through to the middle of last year, which was the height of the pandemic issues, the bricks and mortar component was actually increasing, albeit the online component was increasing at a more rapid rate. And the numbers are roughly these. And again, it's very similar in the United States. Bricks and mortar of online, we'll start with online retailing first. Online is growing at anywhere between 15 and 20% a year, so it's growing enormously. But obviously, it accounts for a relatively small share still of total retail turnover. But against that, bricks and mortar is growing at about 3% a year, which is still well ahead of inflation, and not all that different to the long-term trend growth rate. Online is taking somewhere between 0.5% and 1% off the trend growth rate of bricks and mortar, but bricks and mortar still continues to grow. But the picture is even more interesting than that, because it's not a binary issue by any means. There have been a number of studies done, both in the US and in Australia. In the US by the ICSC, the International Council of Shopping Centres, where they measured what they called the halo effect of bricks and mortar retailing on online transactions, and they found that for well-established brands, opening a new bricks and mortar store generated something like a 30 to 35% increase in online visitation and purchase from that area, and for less established brands, the increase generated online as a result of new bricks and mortar store opening was more than 40%. And those results have been replicated in Australia by work that Quantium has done through its analysis of transactions data. So it's actually a cross-pollination where the two very much help each other. And even Amazon, as we all know, a couple of years ago bought one of the larger supermarket chains in the US, bricks and mortar supermarket chain, because it realised that if it wanted to be serious about food and grocery retailing, it actually needed bricks and mortar just as much, in fact more so, than it needed the online channel. So the picture around online is far more interesting and far more complex than a lot of the headlines might lead you to think. We'll go to the next slide. Thanks, Nadine. And then we come to the tracking of visitation levels in shopping centres, which we're able to do using what they call mobile device data, mobile phone data that's being collected and harvested legally. It's anonymised, so there's no address details or anything like that. But we're able to allocate a point of origin, not a specific address, but at what they call an SA1 level, still a small area level. And what we're finding with this data, which is fantastic, and now gives us enormous insights into people movement around all parts of any city, is that you can see there, certainly for regional shopping centres, and the picture is just as good, if not better, for smaller shopping centres, for neighbourhood centres, and so on. You can see that that basically by May 21, we're back to pretty close in all cases, a little bit lower in Victoria, but we're back to pretty close to 100% visitation as compared with the pre-COVID trends of late 2019. So you can see there, obviously, the much longer dip that Victoria suffered last year as a result of the prolonged shutdown that we had. But even so, it's returned. And what this data also tells us now is that when things do open up, the return to normal happens relatively quickly for the suburban shopping centres. Unfortunately, it's been a different picture, as we'll see for the CBDs. If we go to the next slide. So you can see here, this is a list of CBD centres in Sydney. We've got there some of the leading CBD centres in Sydney, and they're still hovering at somewhere around about 30 to 40% of of pre-COVID levels, and that's Sydney, where arguably they haven't had the shutdown issues that we've had in Victoria, or they haven't had them to the same extent, obviously. But interestingly, if we have a look at Melbourne CBD centres, what we find is that the pattern is not all that different to the Sydney CBD centres, at least based on people movement data. If we go to the next slide. Yeah, so you can see there that Melbourne CBD centres, and in fact a centre like Melbourne Central was back to 40 to 50% of pre-COVID levels. Others are also in the 30 to 40% range. So we certainly have more protracted issues in the CBD, and obviously the absence of workers being reluctant to return. But also the absence of the international student populations, which are such important parts of our CBDs, especially our Melbourne and Sydney CBDs. In my view, that's been a really major issue as well, that has impacted the level of activity in the CBDs. So we do have a long way to go, obviously, with some CBD issues, and I'm sure that Capp will expand on that for us. But really, if I can summarise my outlook for the retail sector broadly, and certainly for the suburban retail sector, it is very much positive. And the data that I've shown you is also borne out by the inquiries that we have as a research organisation coming to us now on almost on a daily basis, certainly on a weekly basis, from any number of retailers that are wanting to grow their store footprints. And again, a number of these were retailers that weren't necessarily performing so well pre-COVID, but certainly retailers such as, for example, TK Maxx and Best and Less and Fantastic Furniture and even Harris Scarf and Officeworks and all of the QSR, the quick service restaurant, the fast food brands, as well as many, many others, are all looking now to grow their store footprints. So, yeah, my view on retail broadly and including, of course, bricks and mortar retail is that I think we're now looking at a period of good, steady, sustained growth as we come out of the COVID crisis, particularly with vaccination, hopefully, getting to the levels that we all wanted to get to. So I'll leave it there for the moment, Keith, and throw it open to your questions.
That's great, Tony. Yes, and if anyone does have any questions for Tony, happy to for you to type them in, and we can either get back to you at a later date if we do run out of time. But Tony, I mean, just before I hand over to Sally, I mean, it's interesting because the data generally doesn't lie. Okay, so we had a lot of talk regarding the cliff. When do we get to the cliff? How many retailers are going to potentially fall? And how good was the rebound? So I suppose by and large your summary is that it's very positive, and we haven't seen the net effects of that happening as yet. In fact, we've probably seen the reverse.
Yeah, that's right. We need to acknowledge, I think, Keith, that for some individual retailers, particularly in the hospitality sector, it's been disastrous, unfortunately and tragically, and that at an individual retailer level, that is a very very serious problem. At a category level, from a consumer perspective, it's not been quite the same, because there are others that are wanting to grow. Certainly the national brand, QSRs are wanting to grow, and we're also seeing that as soon as things are allowed to open up, that sector will return to its pre-COVID strength. We're not going to be going out any less or dining out any less or purchasing takeaway food any less as soon as we're allowed to. But in the meantime, unfortunately, some individual businesses might well, be lost. They will be replaced by others. So it doesn't, but the personal tragedy will still be there. But from a retail sector perspective, it's not quite the same issue. Across all the other categories, as we've seen, Keith, the picture is actually quite bullish, you'd have to say. Yeah,
very positive. Sally, I think you're probably looking at some of your counterparts around the other states, and they've probably got away lightly in terms of how they suffer compared to Melbourne. So you've certainly got a tough job on your hands. Maybe let's touch on a couple of things, and maybe just look at what strategies maybe are being implemented to try and get people back to the CBD, whether it be shoppers, whether it be office workers, and what kind of data you saw. Let's not concentrate on the last 2 weeks. What was the data showing you prior to that, and what were the encouraging signs around the CBD and the return?
Well, thanks, Keith, and thanks for having me as part of this, because I get to listen to Tony, and I always enjoy Tony's data and insights, and particularly those messages today. I think they're telling us, good on you, Tony. I think they're telling us a lot of things. Firstly, we need to acknowledge that that rebound, being the fastest on record, has been a real mark of how we've responded, particularly in Melbourne, to the last 12 months. It's been extraordinary to see the energy and resilience that business owners particularly have shown in between each of those lockdowns. We have had the benefit of massive stimulation over those 12 months, and I think that's part of the uncertainty that we've faced in this last 2 weeks, is we haven't seen that same confidence about those programs like JobKeeper that really provided not just support for individuals, but a massive financial stimulus into our economy. So if we look at what was happening pre-lockdown 4, we were starting to see our pedestrian foot traffic come right back up to pre-COVID levels. On our best Saturday, we're at 96% of normal foot traffic, and on our best weekday, we were at 86%. That's very encouraging to us and gives us confidence about the future. But we do need to caveat that a little bit. We know that the COVID experience has reset the way that people work and the way that people want to live. And the sense that we're going back to the way it was would be inaccurate. But to be hopeful and positive about the future, we think not only does Tony's data show us that, but it's certainly part of our ongoing investment in the city. Some of the initiatives that have been working really well at bringing people back, well, the outdoor dining program has been massive and something that is continuing in the city even through these winter months as we reopen again. We're seeing, particularly around retail, two things. From our point of view at local government level, it's a primary responsibility of ours, we believe, to really drive foot traffic. So there have been FOMO campaigns to encourage people to come in. We've had all sorts of programs from FOMO Fridays, for example, to other retail offers. And the biggest draw card from our perspective is when we can have major events and festivals again, and things like the Comedy Festival really saw that peak pedestrian foot traffic. And we have a very busy schedule of events, and we're planning to actually increase the number of events once we can get through these sorts of lockdown modes. I'm not sure if you knew, but we just launched the Rising Festival on the Wednesday before lockdown started on the Friday. My heart sort of breaks for them, but there are some elements of that festival that will keep going. And I think it's that resilience that we've shown to keep picking ourselves up and almost take ourselves to a new level that's really made a difference. On the specific retail element, we do keep in touch with the really big landlords who are doing a terrific job. But I think, as Tony said, the gaps that we're really seeing are on individual retailers. We do have a new program out at the moment, a $5 million investment in precinct activations so that we can go into places like Docklands where we have vacancy rates of about 47%, which makes a massive difference, of course, just to the whole feel of that area and other places, particularly around our CBD, because our suburbs have been doing quite well, where we've got a program of initiatives coming up to actually draw people in, but importantly, give new retailers the opportunity to do pop-ups, to try new products, to try new experiences, and use this time to really experiment, build up some confidence about new offers, and then look for permanent places around town. So that's one program of particular relevance to retail.
Okay, there's some good initiatives there, Sally. Sally, I mean, what would you say to a retailer that's either trading in the city now, whether it be a small, medium enterprise, and that's looking at some of the data pointing towards sub-regional centres and neighbourhood centres and, you know, the exposure to the city with snap lockdowns? I mean, what would your advice to someone in that position be in terms of backing themselves in, that, you know, how long it might take for this all to get back to normal? Because I think Tony touched on it, and we're seeing it on a daily basis. We represent over 60 retailers here at BDC, and by and large, the appetite for CBD is quite small, and I think it's because obviously it's just the uncertainty, and it's a difficult one, and you know, we're trying to give advice as best we can, and look, we're looking at the numbers saying, look, it's probably something that we park for the moment. So I mean, what would your advice be to someone either in that position or someone that's looking at a growth strategy and had the CBD on the growth agenda, but have now just put themselves in a position whereby they don't know?
Yeah, and look, there's such tough stories for me to hear, but I do acknowledge there's a reality to this. We are in transition in the CBD. We don't want to be fearful of that. We're sort of leaning right into it, but there's no doubt that we're in transition. We do suffer from COVID confidence, and we have to build up COVID confidence in the CBD and right across Victoria. The use of lockdowns to manage the spread of the virus has been particularly damaging. And I think most people on this call would know that all of the studies done recently show that the Melbourne municipality has been the hardest hit. We are looking for a proportionate response from other levels of government, which is why we have, for example, the joint fund with state government, the revitalisation fund, another $200 million on top of the 100 million that we've got. And a lot of that is really around sustaining businesses and activity as we go through this transformation and understand what is the new rhythm of the city, what is the new rhythm for workers in the city. And there's no doubt that that desire for flexibility is real and has now been enabled. And we think that's a positive thing in terms of congestion and commute times. But it does mean that we're focused on who else can come into those city workplaces to fill them with different types of workers. And you'll be interested to know that we've had a record number of inquiries from small businesses looking for cheaper spaces, because now is the time they feel to come back into the city where they've been previously priced out. We've also got many investors that are taking the longer term view about Melbourne. So we see Charter Hall, for example, at 555 Collins Street, a massive $1.2 billion investment to deliver spaces that will house about 7,500 jobs in sort of 4 to 5 years' time. And an anchor tenant there in Amazon Tech, who's coming particularly because, can you believe it, a leading tech company, they want to have face-to-face space. They want to have spaces that attracts the best of talent and brings the best of customer and customer interaction. And so those longer term investment decisions are being made, and that gives us good confidence. It's really about how do we sustain interest and businesses that are here in this short term. And that's why the focus is really on foot traffic and getting people back into the CBD. Look, one of the biggest barriers that's been identified as well are things like getting people back onto public transport, which is still very, very low usage compared to car usage, and making sure that people remain individually vigilant about doing the right thing with masks, social distancing, etc., because those behaviours really make a massive difference to people's experience in the higher density CBD, and it's another area of focus for us.
Okay, that's great. And look, just I suppose just to finish, and it's not necessarily part of your remit, but it certainly underpins Melbourne CBD and most CBDs is that international tourists, it's the students, you know, and it's just immigration in general. I mean, what are you hearing from above in regards to that? And I know obviously we need to probably get a lot of our quarantine issues and our hotel quarantine in particular probably, you know, locked away. But in terms of where you see international tourism opening and students returning and hopefully those office workers returning at larger percentages, and just immigration in general, because we know it's just plays such a big part in Melbourne and it has in Australia for a long time.
Yeah, the G8, which is the 8 major universities in Australia, did a study and they estimate that 800,000 international students and 457 visa holders left Australia last year. They're people that literally fill our streets, they work in our cafes, they help with essential services across sectors that are vital to us like tourism. So getting those national borders reopened is pivotal. The discussions with federal government, state government and us together with universities around the return of international students, that trial that was put to federal government, that's actually progressing in a very constructive way at the moment, despite lockdowns. So we hope to have some more news on that shortly. But Keith, really the biggest element for us, and we're seeing this with what's happening around the world, is that the other economies are opening up now quicker than we are in terms of borders coming down because their vaccination rates are much higher than ours. That's why we've really put the call out for Melbourne to be the most vaccinated city, Victoria to be the most vaccinated state. But actually we need Australia to be highly vaccinated to give confidence for people to want to come here as well as the confidence that we have to open up to visitors. I've got a son actually who jumped on a plane from New York this morning to Paris for an internship for the summer. Completely different environment that they're living in now compared to just 6 months ago when they were being crushed by the virus in the US. And really, we need to move at a pace as a community and as levels of government to get ourselves vaccinated as quickly as possible. Yeah, agreed.
Okay, Braden, I think you have a question for Sally or for Tony. Braden Lord, 7-Eleven.
Yeah, I do. Thanks, Keith, and thanks, Sally and Tony. Wonderful to hear the information you guys are sharing with us and your insights. Clearly, our business 7-Eleven has experienced a recovery of sorts in, say, Sydney and Brisbane, but still not to the pre-COVID levels. I just wonder, perhaps, Sally, what insights are you gleaming from your fellow Lord Mayors about recovery in other states?
Yes, a great question, and we talk weekly, Baden. And can I just say that your store on Swanston Street has been sustaining me throughout these lockdowns, so thank you. The activity in Brisbane, the Lord Mayor and the City Council up there are pretty pleased with what they're seeing, but I think the real story still exists between Sydney and Melbourne. I know there's some new data coming from the Property Council in the next 24 hours about office occupancy, but the lag in Melbourne and Sydney and how connected we are is something that has heightened awareness over the last 12 months. We certainly know that lockdowns have a lag, and not just here in Melbourne, but also in other capital cities. We are working really closely together across city councils to share and learn from each other so we can accelerate some of that return. And one interesting element that I haven't touched on yet is the return in Sydney and Brisbane, but for us, it's really the amplification of residents living in capital cities. So there's a really big push coming for more residents to live in the Melbourne CBD. I know Sydney would like to see more of that, and Brisbane's had some efforts underway for a while. There's no doubt that residents really create that heartbeat in a city, but they also underpin a lot of confidence for local traders, knowing that they've got those regulars coming into their shops each day. And you may have seen in the last state budget, we were successful in getting some measures such as the 100% stamp duty exemption on residences up to $1 million that have been vacant here in our CBD for some time. So those sorts of efforts to bring residents back is something that's key in each of the capital cities, and a good focus on key workers being a predominant part of that. So they'll shop very local.
Fantastic. Well, look, I think we'll wrap it up because we've slightly gone over time, and would you believe not one person has dropped off? I've just been told, Sally and Tony, so that's great to hear. I think we're certainly a resilient bunch. I'm an ex-retailer myself, and I've always said you probably need to be a little bit crazy to be a retailer, but certainly we've shown some great resilience since the end of March last year. I think, you've heard it here, fact or fiction. Well, the data doesn't lie, baby. We're big on the data at BDC, and what Tony has told us today probably just underlines what we've all been probably seeing and what we've been feeling. So although it's difficult, again, as Tony maybe pointed out, to some of the smaller retailers, certainly by and large, it's been quite good and really positive. So I think I'd just like to thank everybody for coming on the call today. Please, if you have any more questions that you'd like answered, I'm happy to direct them to Tony, or you can go to Tony directly yourself. And I'm sure if Sally's office has questions, we can certainly direct them her way. But it's upwards and onwards. Let's long live retail, and certainly let's get Melbourne CBD back to where it was prior to COVID. So thanks everyone for joining. Great day.
Well said.
Yeah. Thank you. Thanks, everyone. Cheers.
Thanks for all your efforts, everyone. They're really appreciated.
Thank you.
Thanks, Sally.
Sally, that was great.